Hello, my name is Filiberto Amati, and I'm a partner at Amati & Associates here in Warsaw. And I'm here today for an interview on the mobility and intelligent mobility and the future of mobility with Daniel Majewski. Daniel, welcome to this interview. Thank you very much for taking the time.
Thank you very much.
We know each other since a long time because we shared once an office about 13 years ago, I think, in Amsterdam from, let's say, a Dutch consumer electronic producer.
Company. Small brand, nobody knows it.
Nobody knows them, we're not going to mention them. And then we've been in touch ever since, and done quite a few things and conferences together. So thank you very much for taking the time to.
Thanks for having me.
To do this interview. My pleasure. So, my first question to you is really about the key trends, both on the digital and non-digital side in commercial mobility. Industry is changing. What are the vectors that are driving this change?
So, in general, we have in total 3 or 4 factors that are impacting the changes of commercial transportation. One is that we have some changing consumer behavior. That is, especially the increase of e-commerce impacting also the volume, from sending conventional letters to parcel services. The other part is that, the customer needs are getting also there a bit more complex in terms of expectations, because it's replacing some of the usual consumer behavior going to a place XYZ to get your product or solution. The other one is that, and this has started since a long time, but I think it will intensify, it's around the regulatory pressure linked to all the push for greener environment. As you know, the European Union is pushing for very, very strong CO2 emission reductions. That is impacting not only the passenger cars, but also the commercial vehicles. And then you see overall, especially in the Industry 4.0 environment, where you get a higher digitization, a higher integration level across factory up to, let's say, customer deliveries, so that you see here also a stronger integration of commercial vehicles and also logistics into this whole topic. So these are the key factors that are right now impacting the commercial vehicle area and transportation.
Okay, very interesting. So let's focus on the Industry 4.0, okay? The digital and digitalization part. What I found interesting is that one of the effects, one of the byproducts of this emerging technology is the fact that non-adjacent industries are coming together. So you were mentioning how the demanding customers and the integration, fleet management, collection of data is one aspect, one important aspect, which for you or any other OEM manufacturer, for any developer, but even for insurances, it's becoming, or fleet management and rental companies and rental trucks companies, they are all now competing in that space. So what are these technologies and what you see that is happening that you didn't expect 3 years ago to happen because of these technologies?
Yeah, I think let's say what we see in this very extraordinary year is not really a big surprise, but it's an acceleration of what we have seen before. So you see that in markets that are not really cooperating, and you see a lot of fluctuations also in the inventories, but also in the supply chain demand, that the integration need is becoming essential. Really essential as I would say it's not any more differentiator, but it's an essential basic need for a well-running company to get really the supply chain integrated in their order books, but also in their delivery activities. And then you have, looking into the trends that are, impacting manufacturing in general. Think about 3D printing and all, let's say, just-in-time on demand that are accelerating through the e-commerce integrations into their demand systems. So that this piece is now asking for high agile systems for fleets to react to different fluctuative markets. As an example, and it was interesting since COVID, you see cross industries, different behaviors of the demand and supply. So you saw the car industry was almost collapsing. You saw, but on the other hand, food and beveraging was going up. You might say, why? People do not eat more, but what happened is that the whole distribution of food and beverage chain completely changed. It's not anymore the traditional supermarket. People do not go out. So that means delivery stations are taking over this kind of retail, basic retail setups. Meaning that you will also have then different impacts on the last mile delivery in the urban transport. That is one. You will have also different fluctuations in demand. You might see almost kind of shocks, demand shocks into the fleet world. Therefore, corporations of fleet companies will go up. The whole topic around digital freight brokerage. So really, finding the right systems or cooperating with systems that they can match better the demand and supply will accelerate now. Shared economy could be one, but I would say in commercial vehicle, then rental models will kick in much heavier. And then we have also the whole hub and spoke landscape that, already since years, big companies like Amazon, Hermes already are building up their operations. This will also accelerate and increase. So I would say there's nothing that is of super surprise for this year, but many trends that we saw already before because technology was enabling it. It is now fully accelerating in various areas. And, this will go on. And I think, this year will for sure make this development more compact for digital. And that is one of the big changes in the trends that I see.
I think it's very interesting. Speaking of which, you mentioned food and beverage. Because of the pandemic, the out-of-home channel, basically, because of the lockdowns, it was shut down. So many of those operators had to pivot. There was a movement of growth of last mile delivery. So rather than in-store pickup to ordering and delivering at home. And this has somehow changed the business model of retailers, of the on-premise, HoReCa, and out-of-home players, as well as manufacturers, which had to readapt to the changing conditions in food and beverages. How the pandemic has changed or challenged the business model of the automotive sector in general, if at all?
Yeah, I would say right now, if you think about what is happening, what happened before COVID, and I would say the automotive industry has been already in a very big challenge through all the transformation, technology transformation it had to go through. We talked about electrification as a big, pressure now that you see for automotive, doesn't matter if passenger car or commercial vehicles. We had already the trends around autonomous driving, not with the intention to have one day everything fully automated, but more from a safety perspective being pushed, bringing in more assistant systems into passenger car and also commercial vehicles. So overall, this investment pressure that was already huge was already paired, and challenged with all let's say, the scandals that have been already, generated many, many years ago around the diesel, etc. So the cost side is tremendously challenging for many, many companies around the world. So that this is also accelerating the whole platform architecture thinking, the way how they going to standardize many systems. That kind of pressure will continue. So that means configuration is always great for consumer, for the end user, but with this whole standardization and platforming, some of that configuration might go down. Then also, what the COVID has shown, that you had very high dependencies of the very global integrated supply chain setup. And that has really impacted the car industry big time. You could almost see in March and in April how the decline was very steep in China. Now the recovery is fully back, but because of demand collapse and paired with supply chain issues that you had, because components were produced somewhere in China, somewhere in Italy or in Spain. So all that, is not that if you fix one supplier, is because you have multiple supplies around the region. It has endangered the overall supply chain security. And that, I think, will also change in terms of how to optimize the supply chain and how to bring down the dependencies that you have across the regions through a too complex supply landscape. And that kind of financial view to say, let's go for the cheapest, will not work anymore because of this kind of repetitive pandemia that we might see in the coming years. Again, hopefully not, but they could come. The price is extremely high that you bring in your own company into this kind of dependencies. So kind of a plan B or supplier B, or exit or substitution tactical setup is going to be a very dominant discussion in the coming months that will influence every company.
In fact, I think that BCG, McKinsey are really talking about the resilience that the supply chain needs, and that now we really need to think in terms of risk and reward when we talk about the lowest cost supplier. So what's the saving versus what's the risk, and how we build a more let's say probably not risk averse but risk weighted supply chain. Now I have two follow-up questions on that. One is on still the effects of the pandemic, because in general we talked about the innovations that were accelerated by the pandemic. Is any innovation emerging innovation and emerging tech which was put on hold because of the pandemic in the automotive industry?
Yes, that has something to do with the cost regimes that every company is imposing now to see how can we best maneuver and operate the company through the year 2020 and to still challenging 21. So that kind of cost pressure. Cash flow management is the number one objective of every company, and that has put some technology developments on hold. And I would consider this more as putting them on pause until you get a bit more certainties in the markets, and that could go up for the next 6 months, where we get a bit more reliability and also certainties in the market demand. So, and then we will have also some reprioritization on technology investments, and it could go to, is the autonomous driving plan still the same as we had it pre-COVID, meaning that you had some differentiation aspects that you say, I want to be the first mover, but here it puts everything into question. Is this still the right strategy? Yes or no? So this kind of reprioritization will happen. Because in my view, also electrification and the CO2 emission reductions will put much more pressure on the automotive and also especially commercial vehicles, because in 2030 we want to reduce 30% of CO2 emission reduction. So here the pressure is extremely big on electrification, meaning that you will divert investments that you initially have put on autonomous driving into electrification. Because we all know that these kind of developments will take minimally 5 to 10 years until you get full commercialization. And that means also that, out of your budget, you will reassign some of the big portions there to these domains like electrification. And then I would say the fleets will do everything to become more efficient. And that goes from operational efficiency, including fuel efficiency. So here, all technology that will support this kind of demand will increase. So I would say electrification and all the systems and solutions that will help fleets transportation to become more efficient operationally and also in terms of fuel, which is cost, because there's a big portion of the operational cost on the fleet side, will be impacted and will have higher priority. And we all know that autonomous driving systems are very complex, are very difficult, and that you need many years to test them. So that I would say if you go through the, also the question, what is the priority for the European Union and also for the national states, they would rather go for prioritizing for electrification and make the European economy more efficient than to help them to a more full automated economy, or here in that topic, driving.
And by the way, from a political point of view, automatic vehicles lack a framework because there is no regulation yet.
Correct.
And there is a hard story to tell in terms of automation replacing workers.
Correct.
And how do you sell that from a political point of view? So I think that's a terrific way of, and I like the concept, the notion that yes, COVID and the pandemic have accelerated some, but they also put a rethinking on your portfolio of innovation, and you now have to reprioritize what is really necessary, important, and relevant. And so where do you invest, basically?
Correct.
Now, the second question, which is less, let's say, pandemic related. It's more about what you mentioned earlier on the ecosystem and the integration, because the automotive sector in general, personal use, commercial use, has always been about dominant design. Creating, competing technologies that create a standard that then everybody else follows. Okay. Whereas what we can learn from fintech, insurtech, and let's say AI-based or big data-based technologies is that integration happens and has happened because of open APIs, because open standards. So not the search of a technology that is better or a standard of technologies that is better than the others, but opening up the box and say, this is how you plug into it, rather than saying this is the best box. So correct. Is this happening? Is this going to be happening as well? Open standards, open APIs in the automotive, and to what extent and how important it is for the integration and collaboration?
Yeah, so I think it's a very very good question, and you will have today some clashes of previous plans that is going for, I'm going to generate data, I'm going to own the data, I will analyze the data, and I will tell you how to consume the data. And that is something that a model kind of one to your end user or to your customer was very much in the brain of many to say, we can probably control this whole chain. With this whole digital era, something is becoming very clear. First of all, new market players are coming into the area that we're not there, and we have companies now like Google coming into with Waymo into this whole area of also transportation. You have Uber that was initially in let's say pest car sharing, and that is now looking into mobility as a service, transport as a service. And if you think in these kind of domain, mobility of a service, then we quickly come into digital solutions, because then you need to have the right systems to detect the demand. You will have then also suppliers being in the place that can deliver the right data that is compatible with open standards. So that is another trend that you can see. And then I think overall, let's face it, the challenges that we're having in the world, not really one company can solve it anymore, and that can only be replaced by the right ecosystem, the right partnerships. So I think here, there will be a shift from in-house investments, so unique in-house investments, to more, let's say, end-to-end partnership investments, and that is including suppliers or customers within the automotive area, but it will invite also complete different players from, like you said, financial services, leasing services, insurances, that like also to benefit from the technologies that are developed in automotive, and then they can link them up with their business model. So I see here, indeed, every business model is not anymore solely defined by its industry-specific business model, but by the adjacent business models. You will see here that cooperation and co-creation will be in a much higher demand. And the one who is really bringing the right agility in there, the right speed in there, the right partnership philosophy in there and approach will, in my view, win this race in the next 10 to 15 years. And that is a combination of joining, getting startups into your play, to get some adjacent markets also linked up, and then also nurturing your business model with new innovations that are coming from completely different industries. So that is why I think automotive in general, because I would say this automotive industry will become the mobility industry. And that has then complete new rules, and will also require new setups, and indeed some standardizations, open standardizations, the willingness of having a more open business model, a more higher collaborative mode, and that will for sure accelerate in my view.
Yeah, I think you have a great point. And by the way, if this is the point of view of the automotive, if you look at other industry, healthcare as a mobility platform in their innovation. Hotels, resorts have a mobility platform in their innovation.
Right.
Airports and airlines have a mobility platform, in their innovation pipeline. So at the end of the day, everybody's coming close, and you will need to work and create, let's say, solutions that work together. So I like that as a definition of what is a collaboration platform. And I love personally the notion and the concept of co-creation as it is. Now, this is what they are. Why are collaboration platforms so important from an economic point of view, from a country point of view, and from an end user point of view?
It will because of the differences in the needs that you have from an end user and also from a customer. That kind of complexity you will only be able by getting this solved by a high agile offering landscape that is able to not only to respond to certain times but also to a more niche demand that we will have. I give you an example. I mean, now with COVID, we all talk about the vaccines that are coming, hopefully next year, better sooner than later. But also here you will have a certain demand in terms of you will have a few productions of these medicine and they will need to be distributed very, very quickly worldwide. So you can imagine the whole transportation activity just to ensure that you have the medicine on time at the right quality level, will have different demands of commercial vehicles. So I'm just talking about one use case. I'm just talking about one application which needs some unique requirements, some unique reaction, some unique support from the transport industry. And therefore, you will have, because we are talking only one of many, that you need to think about, okay, what are all the possible use cases and applications that I need to react on? And that is, if you think about 10, 20 years ago, that kind of flexibility in terms of speed and also ensuring the quality delivery was by way not that complex like we face it today. And therefore, there is not, let's say, one unique solution or one size fits all concept anymore. We will need to break it down to a much higher tailored solution offering, and that you can only do by a collaborative landscape, having here the right value propositions combined in systems that are flexible enough to serve the demand. And that can not anymore be done by one company with some core competence. You need to tap into a collaborative platform so that you can learn more. And we always talk about big data and artificial intelligence, but it's not something that will come up the next day. It's a learning curve that you can only do in a collaborative mode in a very well-established partnerships, and to shake hands saying we need to learn together. And then we can react together saying what is the best value proposition, who needs to chip in with what and how. And then you have, by definition, a collaborative need to go through this whole challenges. And that's the way how we will only be able to get these trends served.
I think it's a good answer. Now, speaking on that, me and you did an analysis a few years back. We looked into the collaborative aspect between two companies, one coming from fashion, one was our employer then, which was a consumer electronic company. It wasn't called Smart yet. It was the very beginning of Internet of Things and the smartification of fashion. So attaching electronics to fashion items and combining them in the offering. So way before Apple and Nike, created the various collaboration that they had. But back then we saw that part of the challenge is that you have, a capital-intensive player with, in a fast-moving market which takes decision, in 18 months when it's fast moving. And on the other end, you have a low capital intensive partner who comes from an industry which is low capital intensive, who basically every 3 months is producing on the fashion side novelty, because novelty, after 6 months, their products are completely useless, be thrown away, and they need more novelty. Okay, and that lack of, let's say, fit between the two typology of the industry, besides the different cultures of the company, and so on and so forth, they were the weak link in that partnership. Multiply that on a scale of 20, 25, 30 different partners from different industries. So what are the weak links in creating nowadays the collaborative ecosystem for mobilities?
I would say it's a very good example, and important to analyze, because if you partner up the speed notion, it's probably key. Otherwise, you will experience a clash of expectations that will lead to a disappointing partnership. That then after 6 months, you are, maybe you had a good experience, but that's it to learn from. Now, in the transport industry, you have, or commercial vehicle industry is a very, let's say, long cycled industry, because it's all about quality, safety, and it needs to be functioning 100%. It's less a design aspect, not completely zero, but it's a less dominant aspect of it. The industry that is, in my view, coming also closer to automotive is the health industry. Mm-hmm. When we talk about autonomous driving, until we get level 5, which means, complete autonomous driving vehicles, you will have still the requirement to have interventions of human being into the driving. But therefore, more important is to get also a check on what is the attention level and also health level of that driver. That is one point, but also, and that is something that we need to acknowledge, that most of the accidents that we have still in the passenger car and in the commercial vehicle are caused by human beings, because people were tired, or they had not the right attention level, etc., etc. Now, the health industry will bring in a lot of knowledge about when warning signs should come up. Mm-hmm. Into your vehicle by detecting that the driver is not in the right level of attention. Therefore, you will have now, very interesting industries coming into automotive that are into, surface technology, that are into detection technology, that are into, also sensor technologies that were not applied yet in the automotive industry, that are coming from complete different areas. Mm-hmm. So, but if I look into these potential partnerships, I would say there should not be really a challenge of speed, because most of them are coming from heavy industries, or where innovation cycles are not that quick. Therefore, in general, I see here not, let's say, obvious weaknesses. Nevertheless, that is one of the criteria that need to be checked right away at the beginning of a partnership, like you have alluded to the attempts of consumer electronic and then also fashion industry, is to see, do we have the right understanding about the value proposition, the cycle time of development of that value proposition. Do we understand each other's key milestones that we need to respect in terms of investments and also resource planning, so that at the end you have the right agreement. So I would say these kind of weaknesses are today, in my view, because I've not experienced them, not there obviously, but in the checklist of partnerships, they need to be incorporated so that you are able to see if there is some, wrong expectations by one or the other partners, and that you right away focus on these weak links, potential weak links. Yeah.
Wow, terrific. Well, Daniel, thank you very much for your time. It was a great chat, very interesting ideas and knowledge and expertise that you shared. And I look forward to talking to you some other time, maybe in the future.
Thank you very much. Thanks for having me, and enjoyed always these kind of dialogues. Thank you very much.
Thanks.
Have a good day. Bye-bye.